Hi, today we'll unpack Micron's fiscal Q4 2025 results released on September 23, 2025. What the numbers actually were, how they compared to expectations, what management told investors about the outlook, and why the stock's reaction was surprisingly muted despite a strong quarter. Micron reported record quarterly revenue of $11.32 billion and adjusted EPS of $3.03 for fiscal Q4 2025. Management guided fiscal Q1 2026 revenue to roughly $12.5 billion plus or minus $300 million and non-GAAP EPS to about $3.75 plus or minus 15 cents, with a target non-GAAP gross margin near 51.5%. These results beat Wall Street estimates on both top and bottom lines. What mattered inside the numbers? Three internal drivers stood out: AI, data center memory demand. Management said HBM and other AI-oriented memory products reached record levels and now represent a much larger share of revenue. That AI demand materially lifted DRAM mix and helped margins. Margin expansion. Non-GAAP gross margins expanded materially. Management pointed to tight DRAM supply and favorable pricing mix as the cause. That margin improvement is a major reason EPS beat. Heavy reinvestment but strong cash flow. Micron continues big capex to expand advanced nodes, capex till $4 to $5 per quarter, but it still generated strong operating cash flow and finished the quarter with healthy cash on the balance sheet. Expectations coming into the print. Importantly, expectations were already high. Analysts and investors had priced in robust AI-driven demand for months. Micron's stock had rallied strongly ahead of the print on that narrative. Many models already anticipated strong revenue and elevated margins, so the market was looking for not just beats but surprises beyond already elevated expectations. Management outlook and guidance. Management gave aggressive but measured guidance. Revenue and EPS guidance signaled continued momentum into Q1, with gross margins guided above 50%. They also reiterated demand strength for HBM and expected continued sell-through for AI customers. That guidance confirms the thesis, but crucially it was confirmation rather than a step change upward relative to what many investors already expected. Why the stock didn't pop? Now the key question: if the quarter was so strong, why didn't MU run hard after the print? Here are the main reasons. Each one mattered to traders and explains the muted reaction. Good news already priced in. The stock had already rallied on the AI narrative. Beating estimates became validation rather than surprise. When the expectations bar is high, the market needs more than a beat to re-rate the stock sharply. Guidance confirmed, not shocked. Management guided for another strong quarter, but investors were hoping for an even more explosive guide, a la some pure software, winners. The guidance was excellent but not a blowout. Cyclicality and durability concerns. Memory markets are volatile and capital-intensive. Investors worry that strong margins can reverse if industry supply gets looser or if the capex cycle leads to oversupply down the line, especially as Micron is itself investing aggressively. That dampens enthusiasm. NAND softness and mixed messaging. While DRAM, HBM looked great, NAND showed weaker YoY trends. Mixed segment performance makes the story less uniformly bullish. Macro and market headwinds. Broader market factors, rising yields, profit taking after a big run, and rotation into other sectors, capped upside even when the print was strong. Short-term traders also used the event to take profits. Net result: positive headline beats plus strong guidance equals validation. But validation when expectations are already priced in often produces a muted to modest stock reaction rather than a major re-rating. What to watch next for investors and traders? The follow-ups to watch are: HBM pricing, supply status. Does Micron keep commanding premium pricing for AI memory? Management said HBM sell-through was very strong. Capex cadence versus demand durability. Will Micron's heavy investment lead to supply additions that could pressure pricing? NAND recovery. NAND trends and margins, since weakness there could drag consolidated results. Customer inventory cycles. If hyperscalers rebuild inventories, that's bullish. If they decelerate, it's a negative swing. Listen for customer commentary in future calls. Quick valuation, market psychology note. From a valuation perspective, the market has already applied a premium to Micron because of the AI thesis. That means the stock needs sustained delivery of outsized results and consistent margin expansion to keep multiple expansion intact. Otherwise, the multiple can compress quickly. Psychologically, investors now require evidence of durability, not just one quarter of strong results. In summary, Micron posted an objectively excellent quarter and strong guidance, driven by AI, data center memory demand, but the market's expectations were already high, so the beat was more validation than revelation. For investors, the key is durability. HBM pricing, the capex to supply cadence, and NAND trends will determine whether this quarter is the start of a multi-year re-rating or a peak in the cycle.